the payroll protection plan versus unemployment for small businesses. Hi, my name's David. Welcome to the Cranky Cameraman. I'm a longtime freelance director of photography. I shoot business and broadcast videos for clients. My business is connected to corporate events, professional sports, large gatherings, essentially the types of business that are going to be in the final phase of reopening once this pandemic passes. And every day I have conversations with colleagues in the business, other camera operators, location sound, editors, directors, producers. We're all battling the same set of circumstances as freelancers or small business owners. And here's by the numbers, a breakdown on the PPP loan versus unemployment. Quick top level breakdown on our business structure again. We are an S corporation. I've got the 2 employees, myself plus a spouse. The IRS defines that an S corporation, any employee, shareholders, or corporate officers have to collect wages through payroll. And then in 2019, we took extended vacations and then had a slow patch. So we reduced payroll in 19 to 30K. And that 30,000 each basis for 2019 is what defines our unemployment benefits here in 2020 and is also the gross wage base for the PPP loan. So Q1 of 2020, we issued payroll on track and paid all our payroll taxes based on the 40K amount, which is $10,000 per employee for Q1, and then promptly the business shut down in middle of March. To do a comparison between the PPP loan and unemployment, I first need to figure out what my actual tax rate is on income. So we're married, filing jointly, household income, so it's not 30K, it'd be 30 times 2, which is 60, but again, I said I'm running this off of historical returns, which is 40K base each, and then assume we're going to have some company profit and additional distributions above our payroll. So based on all of those assumptions, I'm just going to plug in 90K here for this example, and then scroll down here. This is the smart asset calculator. I like this one because it's simple. So you can see here the effective tax rate works out to be 8.32 for Fed, and state of California is 2.81. Next, I need to figure out what my employer unemployment insurance tax rate is for California. Now, I know this is going to go up once we resume payroll and get back in business. But for now, I'm going to use this descriptive paragraph here that basically says, 3.4% for the first few years for each employee. And then it maxes out once $434 has been collected per employee per year. So I paid most of that in Q1. Do the math here. So 40K full-time wage would be 10K per quarter times 0.034. So 340. So I may only have an additional 94 to pay in Q2 had the business stayed in business with employees on payroll. Okay, so I put together this spreadsheet to calculate using that 30K base, which is, let me just check the math here. So $2,500 a month times 12 is 30,000. Right? So gross wages of $2,500, and then you can see the rundown here on employer payroll tax items. Workers' comp, Social Security, Medicare, federal UI, state UI, payroll. The payroll line item is just the fee from the payroll company. It's actually a little bit higher than that a month. I think it's $40, and then they charge another check fee per paycheck issued, but close enough. So, and then on the employee side, the withholdings for FICA, federal income and state income tax. So you can see here $2,500 works out to a net pay, a take-home pay of $2,031 per month per employee. Okay, jumping over to unemployment. The benefit is based on the total wages for 2019, which as I explained is 30,000. So that pencils out on the EDD side to $385 per week. And then there's the federal CARES Act, additional $600 in UI per week. And then that is, I want to get a monthly number here, so we'll go times 4. So $39.40 a month per employee. Now, an unemployment benefit does not have taxes, some of these taxes. So I'm going to remove workers' comp. There's no FICA tax. There is federal, but it's only on the employee side since the company didn't issue it. There's no employer side taxes, and then there's no FICA tax. And in California, there's no state income tax on an unemployment benefit. So that just leaves a federal income tax due of $328 per month. And again, this $832 effective tax rate is based on this calculation I did, assuming a household income of $90K. Next, let's take a look at how the numbers break down over the next 3 months. So the net pay from the PPP loan is $2031, and that runs for 8 weeks. The UI net benefit is $3612, and the $600 from the CARES Act runs until the end of July. So you can see here, because you miss a full third with the PPP loan, and again under the assumption that there is no business, we're still in lockdown, but net pay from PPP over 8 weeks is $4,062 per employee versus 3 months of benefits from unemployment, it's $10,836. But let's say, okay, if you're not working, then you're eligible for unemployment again. I don't know if there's a penalty week or not. I'm going to assume there is. So it would be $385 per week from California plus $600 from the Fed times 3 weeks, assuming there's a penalty week in there. Oh. And then my household has 2 people with the same numbers. So you can see here the household difference between PPP and UI, or rather PPP and unemployment in the remaining third, so a hybrid mix, is $14,000 in household net income versus unemployment, $21,672 of net benefits. So that's a difference of $7,600 over 3 weeks. So now the big advantage to the PPP loan would be work comes back. Let's say in week 2 or 3 of the PPP period, suddenly the calendar fills up and can bring employees back on. Then there's no reduction in the amount of PPP benefit. You just have to maintain, you can't increase the payroll on those employees. You gotta keep them on 8 weeks at the calculated PPP amount, and then the additional 25% per month could be used, I think, for the employer payroll costs, and then plus other business expenses. And really, my business doesn't have that many qualified expenses. Okay, so we made the decision unemployment's a better deal. Now what happens if I book a job and I need to come back on? Well, I'm not going to be able to go back to full-time payroll off of like one day shoot. So a buddy of mine, a sound mixer, sent me this calculator, which looks to be correct based on what I read on the EDD website. So you can see here, my weekly benefit is $385. The CARES Act funds is $600, so $985 weekly benefit. Now I got to figure out my hourly wage. This $385 is based on 2019. It was $30,000, but as I had explained, I'm really a $40K full time. So if I take $40,000 divided by 52 weeks, that's $769 a week. Now I'm going to divide that by 40 hours full time employment. That's $19.23 an hour. So if I plug in 1923, let's say I go out on one shoot day and receive payroll for that full day. We'll assume it's 10 hours. That's 192.30 for the day. And then that means you're eligible in California for partial unemployment. It's based on a multiple of your gross income. You only tally 75% of your gross wage. So that 192.30 is 144.23 subtracted from the 385. So I get a reduced benefit in that week of 240.78 plus the CARES Act funding, so 840.78. Based on that breakdown, I'm good to accept part-time work. Well, what little work comes in based on my experience of doing this for 20 years is it's gonna be 1, maybe 2 days in a calendar week. And based on this math, I can work up to 26.5 hours and still be eligible for partial California unemployment. And the CARES 600, from everything I've read, it does not prorate based on partial employment. You're still eligible for the full 600. The PPP loan, I'm sure it's working and saving many small businesses, especially if you have higher wage employees that are up to that $100,000 limit. You've got a big commercial lease and you can utilize that 25% per month to cover your building. Maybe your employees, you don't want to risk losing your highly skilled and trained employees to a competitor. But in our case, because of our nature of our business, unemployment was the better option. And I think in chatting with some of my peers that have a single employee corporation, in those cases, the PPP loan is working for them because the wage is higher than the single unemployment benefit. But yeah, I don't know, it was interesting how the numbers penciled out. This is not what I was expecting when I originally applied. So I hope that helps, and let me know your experience and how you're managing the current situation. Love to discuss it in greater details in the comments. Thanks for watching.